Hello, everyone, and welcome to this episode of Coffee with Carl. As always, I am your host, Carl Zoellner, one of the senior attorneys with Anderson Advisors. And today we're going to look at a different view or different perspective of your overall entity structure that, like I said, is a little bit more outside the box, but I think has helped some folks clarify sort of where or how or kind of the why behind why we set things up the way we do. So as we look here, I'll take you through kind of the different pieces, and then we'll go from there. So number one is you'll notice there are three silos in this scenario. There is a passive, an active, and one that usually doesn't get referred to a whole lot, but say the tax-deferred silo. In this case, referencing a solo 401k, just because, quite frankly, from a investing with your retirement account perspective, tends to be the most flexible and you get the most benefit over a traditional or Roth IRA. So like the solo 401k there, I made the example, so I used the example, the one I wanted to. The active side, this is going to be more for things like your, flip a piece of a property that you're flipping, or even wholesaling side. And you can see the taxpayer here at the bottom is going to be the corporation. And then ultimately over here on basically the third silo is the passive silo. And so these are for things like rental real estate, things that you get passive income off of. So income basically not subject to self-employment tax. And so ultimately things like rental properties go over here. You'll notice the blue box because the blue box is basically intended to reflect that Wyoming holding company. And then just depending on what type of state you live in, it's listed as either sole proprietor as the taxation choice or partnership, depending on basically depends on how many pieces of property you have, as well as if you're in a community property state or not, if we can even choose the sole proprietor route or disregarded route at that holding company level. Given, if we're just using this as a sort of one-to-one example here, if there was this many properties in this passive silo here, and you'll notice the pictures are consistent between the different perspectives I've shown you. So if you go back and review some of those videos as well, each of these red boxes should in general sort of correspond to the red boxes on the flipped and traditional version as well. You'll even notice that for that Florida one, this one right here has got the land trust as well. As in the prior video, talked a little bit about why that is a benefit in Florida. So I wanted to make sure it went across all three between the traditional, flipped, and this introduction to this new silo approach that I've used with a couple different clients who we were quite frankly just having a little bit of trouble communicating the overall strategy. So I went this route, and for whatever reason, this one kind of cleared it up. So if there's somebody out there this helps, it's worth it. So, and then ultimately you see down here at the bottom of the three silos, you still have your living trust. Like I said, so if you're going the flipped route, if that's helpful, you can also do the flipped route on the silo approach. It would just be at the top of the silos versus the bottom. So the other thing to note about the siloed approach is it's a little bit easier to show kind of the interactions between the different types of taxation. So like for a stock or crypto trading limited partnership, from all my traders out there, you can sort of see the different, there's a split ownership. And then, that usually the active side or the general partner in that limited partnership is going to be something with corporate taxation. And then you can also see that there's the ability to do different things within that retirement or deferred silo as well. That can also involving a corporation for things like crypto mining, things like that. Anything that would normally be done as an active business in the tax deferred silo, if you do it directly in there, the problem is you can generate a different type of taxable income. But usually if you put a corporation in place within that entity and do the active investment through there, the sort of nuts and bolts piece of it is that corporation will kick off dividends, which would then still fall into the correct category for the deferred silo to be able to handle those and defer that taxation at least until you withdraw it. So there's some options there is what I'm getting at. Everything, as I mentioned in previous videos, is very individualized. So my suggestion would be is if you have not already had an individual consultation, that you use the link that are amazing staff will provide, usually below the video, and be able to do that. So that way you get your individual picture. This is sort of intended as kind of general information or information that may help clear up if there's some ambiguity going on currently. But like I said, this is sort of a one-off approach that I've used in the past that have helped. So like I said, if it's going to help somebody, great. If you like the more traditional or flipped views that I've done in previous videos, you can also ask for those too during that consultation. So basically the idea, this is more of just sort of a very basic breaking it up for different type of taxation on different type of investments. Like I said, for the passive silo, more for rental real estate, or maybe even syndicated investments, things like that, where you're basically just putting money in and getting money out, that sort of mailbox money scenario. Active investments, more like the flip real estate, wholesaling, sort of sweater your brow type of deal, runs under that active silo. And then, like I said, if you've got retirement accounts or considering one, the one I would consider, if you don't have one already, is a solo 401k, just because the contribution limits are so much higher. And then ultimately, like I said, we can always blend who's involved, or who or what as a taxpayer is involved, to get you the best tax benefit results at on the bottom end. The most common blend scenario is for traders right now. So this is, like I said, this entity right here that I'm circling with the cursor is for stock trading or crypto trading, because they generally generate the same type of taxation. And that limited partner structure is the best way to do that at the moment. It's gone back and forth over the years between LLCs and limited partnerships. The nice part about the limited partnership is there is a presumption that the limited partner is passive in the overall entity. So that works in our favor. So that's why it's gone from LP when I first started with Anderson, a better part of a decade ago. It then went to LLC for a few years, and now we're back to limited partnership, like many things are. Had a client actually ask the other day about why we're back to limited partnership. And I said, listen, we keep track of, tax and court cases and things like that. And where there's an ability to improve on our structure, we have to be able to do that too. So where there is, we do. And then you get the most up-to-date and recent info, especially if you're joining us for in-person or even our online events where we have live attorney help. And that way you get the most recent and updates, because yes, we do keep a sort of finger on the pulse as far as tax and legal updates that happen. So yeah, that's ultimately, like I said, the most common piece where you see these silos interact right now are for our pro traders, as well as for cryptocurrency traders, because basically those assets are taxed the same sort of way. So number one is we protect them. Number two, we look at the tax efficiency standpoint and go from there. This one, and like I mentioned as well, this one is more set up like the traditional structure though, as I mentioned, because all three silos would eventually pour into your living trust down here. And so that's why it's sort of set that way, because that's what's going to reflect most accurate or most recently. If you have a current structure or you're a current platinum client with Anderson, you'll see like I said, the living trust usually shows up at the bottom. So wanted to do this silo approach especially with the traditional view, just because, like I said, that's going to be the vast majority of what most of you are going to see. You heard me mention individual consults and individual pictures. That's, if you have not done that yet, that would be something great to do, because number one is we give the initial consultation. There's no cost to, so there's no risk. And then ultimately, like I said, you get your own visual depiction of what you should be doing. And like I said, there's a ton of great advisors and attorneys that do these consultations. So you're more than welcome to, like I said, I would say that's kind of the first starting point. The other piece is to continue to keep taking advantage of all the free content we put out. Toby and Clint and Michael, the partners of Anderson, put a ton of content out between the three of them. And then, of course, Coffee with Carl. And so you already know about Coffee with Carl if you're seeing this video and hearing this statement. But I would encourage you to please continue to like, subscribe, and share, because you're doing that gives us indications that we need to keep producing more free content. Just want to say thank you for joining me for another episode of Coffee with Carl. We will catch you on the next one. And until then, like I said, keep taking advantage of the free content. If you haven't had that individual consultation, please do, because everybody with their facts and circumstances is going to be a little different, as well as you can also request different types of content if you have additional questions. There will be some more content coming out, especially involving some of the different forms and things like that that are available to our Platinum clients. So stay tuned so you know to look out for them. Thank you all. Have a good rest of your day, and catch you on the next episode.